Good afternoon, everybody. It is a new day, and yeah, I'm streaming on the Saturday because we missed 2 days during the week. So I want to do minimum 5 days every week, potentially seven. Seven is like bonus. I obviously do research, studying, etc. off stream, so there's that. So it's not, sometimes it may be a Saturday, Sunday I don't stream because I don't want to stream, but I will not take that for granted because I do obviously have the fact that I do not always stream my study sessions off stream, obviously. So today we're gonna just go over some of the videos. Like I didn't make a lot of notes from the volume 4 of ICT Scouts Sniper series, so we're gonna go over that video, make some better notes, and then after that we will kind of review last week, make some notes, and I do have to start getting ready very very soon. Maybe maximum an hour I can stream for.
Flow or order flow.
So I'm gonna come back to basically the beginning. I only took a little bit of notes. So on the week of last, we expected, can actually create biases for next week as well. So we expected DXY to be bullish. We tagged into this weekly fair value gap here, and then we pushed up. So we've now officially created this swing low right here, and we're bullish up until this point of this swing high, which lines up with this 102 flat level. So we have this 102 flat level lined up with the swing high ITH and this swing low. Oh my gosh, how do I mute this? Sorry, my friends. So this swing low confirms the bullishness, obviously, and this means I'm going to be bullish for next week. We haven't. Our target is here. We have this weekly fair value gap target, which lines up with this 103.7 level, which is the body of this candle right here. Obviously, I like to use 107 or it's 7 flat. That's good. And then if you were to take it to right on the body, it'll be 1735. So there's about 3 pips spread there. Obviously, it's a DXY though, so it is an index. And nevertheless, swing low, weekly fair value gap, we tagged into that, have this liquidity resting above it, and it's at this institutional level. So that is my target. We didn't reach that this week. I think we can potentially reach that for next week. So that's our bias for DXY. Now, obviously, that's just DXY. It doesn't always translate into specific pairs because sometimes pairs have their own personal relationship with the dollar. The dollar index is just the dollar against a pool of currencies. So it takes every other currency and gives an average. Essentially, it's the best way I can explain it. Therefore, that means within that average, you're going to have anomalies or deviations. And so one of the deviations you may have is that there's a specific pair that's doing even better than the dollar, even if DXY is going up. And so the dollar may be going down against that specific pair because it's going up at a faster rate. So it's not always which one's doing better, which one's doing good. So it's which one's doing better faster. So that is sometimes what you have to account for. Now, NZD USD was a pair I was very much interested in last week. This was one of the trades I wanted to take. I don't think we got the retracement, which was what I was waiting for. So we had the sweep of these highs. There was no displacement here, no clear and obvious displacement. Then bam, we get one here. And I'm looking immediately for a retracement in. And on this candlestick, we only came up to this area here and created another fair value gap, but unfortunately, this never came back up for that opportunity to re-enter. So we might have to look at potential ways where maybe we zoom in even more, and we're very much sensitive. And the only way I can increase the sensitivity is in having the perfect context, which is that, okay, from this point on, I'm looking for sales. And from that moment onwards, I need to have security in that. Let me break this down because I'm saying a lot. My next step is to find areas where price is definitely going to be used as a turning point, or an area where price will use it as a turning point, for my entry model can then now start to be activated. It's activated based on my context, which is a liquidity sweep, the bearishness, the bias of the weekly, daily time frame, where we are in that place. What have we just done? What liquidity, what type of liquidity have we just taken? So once that context is formed, then I go into my entry model. But my entry model is very specific also because of the fact that I want to protect myself. So I can make my entry model less more sensitive, which means less strict, right? So I can enter it on the 1 minute, bam, bam, bam. As soon as I see the tiniest wick into the area I'm in, I can do that, but it means that my context has to be perfect. Now that's my weakness, has always been the context. My entry has always been great. Weakness has always been the context. Can I enter? Can I move on to the entry model? And sometimes I say yes when I shouldn't be saying yes because I don't have the correct things. So that's what I'm working on. Now, for the past couple of weeks, that's what we've been working on, and I've improved in that area. For example, we knew, let me just make sure I'm in the right spot. Get the red lines so we can start showing where we want to start looking in. I want the 1 minute. Cool. So I lost my train of thought just there, but yeah, we're going back over. Like I said, I've been working on my weaknesses of the context side of things, so I need to work on that. And I think one of the main things is that making sure there's some institutional involvement. Institutional involvement is categorized by partially fair value gaps because of the fact that retail traders typically cannot have that impact on the market. So over here, we had the liquidity sweep. That happened, and then we quickly came back into this range. So in theory, as soon as we had this liquidity sweep, maybe I can start looking for bees. Maybe I can start looking for sells, because the only way it doesn't displace and come back into the range is if I've got my bias wrong. If we're not actually bearish, then this doesn't matter, because then it could do this and come back up eventually. So in theory, I was looking for entries all the way down here, but I could have been getting in around here. Why? Well, 10 p.m. was that? That's end of Monday, so maybe I wouldn't, based on the fact that what's 10 p.m. That's gonna be Tuesday, 3 a.m. I would have been asleep, but you would have had the opportunity to get in here. Why? Because you have this leg price, and then you have price coming back up into this optimal trade entry. You can see there's fair value gaps in between here. Now you don't need to always wait for the exact touch. It can be the general vicinity. Ideally, you want to be entering above the midway point, and you can see price came up into this sector of the Fibonacci retracement. So you could have got in here, and what's so interesting is that even if you put your stop loss here, and maybe add like a couple of preferred spreads, which would probably take you here, it still never once came back up. So if I zoom out and I set my target to where it was, so 1 to 7, just like that. And all it is getting in after the liquidity sweep. So the only way that this would have been valid, that's only one instance though. One instance of an entry. There's more than one opportunity, I think, that price gave us for the possible entries. Let me change. Sorry, what I'm looking for. I think it's here. Get 1 minute. So what I'm looking for now is to go over what made this liquidity sweep better than maybe a smaller time frame one. Okay, was there another opportunity? Or you had a displacement here, taking out this, boom, boom, but this would have lost you money if you would have gotten here. Because low, low, bam. If you go in here, set it here, and like two spreads, like 6.6. But with spreads, that's what have taken you out. Like I had 2 pips, 2 to 5 pips anyway, but you may have getting taken out. If, like 2 pips plus, with the first candlestick is here, I would have done like this, and then 2 pips is 7, which will take us to here. So I don't know. This would have been stopped out, especially on NZD USD. So I don't know if you can rely on that specific entry. But then you had this opportunity here, which is where I started to get interested, but price didn't come back up, which is the problem. Like no matter which way you look at it, price just never came back up once. So that's why I didn't get into this trade. But we just seen that we could have got an entry here. Obviously, this time wise, I don't think I would have been awake. So I don't think I would have even got into that opportunity. But then don't forget, it's an NZD USD. So it is going to be moving sometimes during Asia session. So I do need to account for that. And you can actually see, I think, when did the opportunity arise? Check this session. It was yeah, that was during Asia session. So it was a bit difficult. It would have been difficult to enter that. In terms of time, would have been steep. But at least the idea works, which is good. And then you can see again, move, consolidation, move, consolidation, move. This one wasn't as much of a consolidation, but it was a pullback. I did buy over here. Oh no, it's gonna take this off now. I did buy during this phase here. Let me zoom in. Why did I buy this? Well, here I was looking for sells. Right here, I think I even entered the sell on a very, very, very low risk. I think it was like 0.05 or 0.05 or something like this. I normally risk at 2-3%. So price came down, created this lower low from this 1 hour fair value gap. So we also got displacement here too. So displacement, boom, and taking of liquidity, low, boom, sell with the bias of it being bearish. Could be valid. When you look at the swing high to the swing low, though, this area of the 1 hour fair value gap is not in an optimal trade entry. It's below equilibrium. So it's not ideal to enter here as a continuation because it's at less than halfway from this leg to this leg. And for reference, this is one leg which we got during from Monday to Tuesday. We've got huge consolidation from Tuesday all throughout Wednesday, and then Thursday we got the next delivery. So we had Monday establishing manipulation where we're going, Tuesday deliverance, Monday all of Wednesday, partial Thursday of consolidation, and then Thursday, Friday delivery. And then the Thursday delivery was clean in alignment with the trade in direction. We also had a low of 57622, so nearly at the 5762 flat level, which would have been an institutional level. And then price then rallied upwards, gave a fake signal here, took out some liquidity here, which used that to fuel upwards. And the reason why I bought this was simply because price created equal highs here. And I thought, okay, price is going to turn this into inverted fair value gap right here. Let's get in. We got in here, but with spreads, it took us up here. It was meant to be something like this. All right, but with spreads, that turned into 1.5, sorry. And so we targeted equal highs. We were not greedy. In hindsight, we could have got in all the way up here, but I was never going to hold for that long. This would have tripled our account because we put in a lot of lot sizes, but low risk. We risked like what we normally would have risked, but because it's only like 2 pips at the time I entered, it was like this. So I was less pippage. I didn't count for as much spread, so it was a lot of loss in comparison to my size account. And the price went up very quickly. You then see displacement here, and I had to close it manually because it just wasn't triggering it. Anyway, and you can see this fair value gap here was formed. Price then rallied up higher and then came back down again. Why did it come back down again? Well, because we're bearish. This is just price rallying up or retracement. So when they have a retracement, you shouldn't be too bullish on the idea of retracement, even if the retracement is bullish. And price broke this swing low here. I wonder if it displaced. Yeah, we had some displacement here. Price came back up, broke again, and then just consolidated downwards to the end of the market. So that was NZD USD, but we now want to go quickly over what caused this liquidity sweep to be so valid. So first of all, what highs were included, and this is where we're going to take some notes. Need to get a pen. Use this one. Oh, this pen feels nice. I'm gonna save it. Well, how much ink is left? Yeah, a decent amount. I'm gonna save it for tomorrow. So my pen is broken. Mm. There's no way it just broke like that. Okay, I did it. It was upside down. I was doing it. Okay, I'm gonna do a pen. This pen sucks. Next. All right, I'm taking a note of that. So the characteristics, we had a swing high on the daily time frame. So daily buy side high, that was a swing high. Three equal highs on the daily. Also was an order block. Okay, anything else? Have a high here. 59908. 59941. Hard to tell with the night lick to zoom in. Probably got a probably got an entry mode around about here. I forgot I can eat. Does it want to load? Okay, it's just not working. All right, we'll move on anyway. We have about 15-20 minutes, so I want to ensure when it's reached this place as well. Yo, there's literally no accents because what? Let's go through. Let me try to find another example. Let's look at here. Blue. Let's look at here. And then lastly, here. Let's try and analyze what made price go from one area of consolidation to another. Since this is this week, we should be able to smaller time frame this. I'm just getting some context. So larger time frame. I'm gonna try to spend 7 minutes on this and then 13 minutes on the video, and then we'll call it a day. I won't stream probably till like, because I have a long evening, and then after this I have I'll stream tomorrow sometime. I don't know how. Might try to find a weekly bias for next week's of certain pairs. Maybe even do that a little bit of that today. Anyway, let's get ready. 7 minutes on EU. Let's go. So weekly time frame, we had this weekly fair value gap. From here to here, there's this weekly fair value gap here. We created equal highs right here, which is at the low of the lower bound of the fair value gap. So the third candlestick contributing to the bearish fair value gap is the high of that candle that we had two equal highs. So one candle obviously contributing to the fair value gap here, and the next one following it created equal highs. So we didn't take that out. Then the next day we had the inside day, which was inside the previous day. And once we had that, we then swept both highs, which is these equal highs here, whilst tagging into the fair value gap. And then, of course, we had obstruction above. There wasn't really any imbalances or liquidity that was close. So I expect the price to rebound from here. And from that moment, we did. We swept it, closed just below here. From this day onwards, I'm looking for sells. And 1, 2, 3, 4, 5, 6, 7 of the next 7 candles, which is the week, only one candlestick was bullish. So even if I was looking for sales each and every single day across this week, you could have probably found multiple opportunities in your favor, since you had 6 out of 7 or 4. Wait, 1, 2, 3, 4, 5, 6 out of 7 of these days contributing to your bias, which meant that all those candles, you had a very high success rate of being profitable just based off that. So this is a weekly fair value gap. Once the weekly formed, I said, okay, by Monday, Tuesday, we should have the high. When we created this initial move upwards, it was very early, but I was very confident that this was going to be the high of the week. We opened here to tie it down a bit, took out this liquidity. Then we closed here, pushed up. We didn't really take much liquidity. I mean, technically took this one, which is from the 4 hour, which is this swing high right here. And we came up here, but we didn't form this being as the high of the week. So we actually already had this bit here. So we're going to zoom in a bit. Let's check what made this. Now that we've got the context, what made this go down? So we swept, because this is also the lower bound on the fair value gap, but it's also some highs. Swept that liquidity, tagged into the weekly fair value gap. Sorry, swept this liquidity, tagged into this fair value gap. So wait, we swept about how much? Oh, this one here, I see what I'm saying. We swept it by the high being 14807 by about 18 pips, I think. Okay, so now what made this go down? So context wise, we've just taken by 15 pips some liquidity. We also entered into this weekly fair value gap. So let me make a note of this. From the 15th of July. So wrote down on my notepad, Euro USD recap for this week of 15th of July 2026, not this week, literally the week in front of us on the screen. And the question is, what caused price to move out of consolidation observations? So we're basically going to go through exactly that. So now we've know what we're looking at, what happens. So we have this consolidation. I'm just going to go through each candlestick and then we're going to go through what we can see afterwards. So we have displacement into taking out the liquidity. So we didn't just take the liquidity out, we took it out with displacement. So essentially what that confirms to me is that there's actually institutions involved in that sweep. It's not just a sweep of just nature, it's or algorithmic price. Offering is a probably manipulative sweeping. So we took that liquidity here with a displacement, then we come back down into one of the fair value gaps, push up from it, and we get into the upmost part of the bullish candle, which I won't note because we closed above it, I think. So the high is 4738. The close is 4738. So we not once closed, or 3739. This candlestick did close above it by 0.1 pip. So the consolidation is between a fair value gap and a bullish candlestick in a bearish move. We didn't close above it once. We also didn't go deeper here. So we created, in a way, liquidity. Right, so there's equal highs here on the 50-minute, and then equal lows here on the 50-minute. Price then moves up, sweeps those highs, followed by a minor displacement. Okay, and then we sweep the lows. No displacement on the 15 anyway. Then we come back into that range. Then we displace downwards, pull back a little bit, displace downwards even more, distribute a little bit more, and then we start to consolidate. So the first observation that we noted and said earlier is that we displaced, taking out the liquidity by 15 pips, which is on the weekly time frame. So the high was on the weekly time frame, plus it was in a weekly fair value gap, and we took it out by 15 pips or 18 pips. Okay, then we consolidate. In between a fair value gap and I'm going to put in brackets those fair value gaps below. How many? So there's 1, 2, 3, 4. So there's 3 below. Make sure it's clear. So in succession, add that. So there's 3 fair value gaps below it in succession. So it's consolidating between the 15-minute fair value gap and in a small downwards move and a bullish candlestick's high. Let me just make a note this is bearish. Bearish week. Bullish candlestick. So the bullish candlestick, which was formed during a bearish displacement. And in bracket, I'm going to say 1 candlestick before. And then I'm going to put slash order block. Price. Price never once closed above, only once wicked above. And in brackets, liquidity sweep. So the price never once closed above, which we established, apart from this occasion, and then plus or except by 0.00001. So price retested it. Equal highs, and it created equal highs in the process. So price retested the high of that candlestick, and it created equal highs, but it never closed above. Even this wick didn't close above. This is the candlestick we're referring to. This bullish candlestick here, price displaced downwards. And it was this between this fair value at bam, bam, bam. Then price sweeps minor equal highs. And displaces downwards smallly. And small displacement down after. And then we can say next candle into range, into fills it. Then we take sell side liquidity. As you can see here, we took the sell side here, which was equal lows, which was equal lows in fair value gap. So bam, bam, and bam. Those are the equal lows here. That got taken out there. Following this displacement, took it out here, tied back up. I guess you can argue we took some more equal highs, which was almost ITHs. Let's make this a separate point. So price returns to take small high ITH liquidity from fair value gap mentioned above, which had 3 equal highs. So 3 highs were present. 3 equal highs were present. And then we shift downwards. Into new range of, I think we're going to skip the video. There's no point. Let's just stay on topic. We're going to go through this and potentially go through the next consolidation. What was we consolidating between? What caused us to move? And that should actually take us to the time limit of the end of the stream. So then we shift downwards into the new range of consolidation. And then I'm going to say partial distribution. The time was, the move started at 8 o'clock New York time. And this obvious displacement, like it stands out to, compared to the others. We can side note that. What else would be notable? You can then make a note that price filled mostly fair value gap. Next candle. And that would now end the move. Price filled all of the fair value gaps. What about on the 30-minute? What do we see? Rejects slightly first, respects the second. So I just wrote down there that price distributes to order block, which is this bit here. So from this point onwards, it comes all the way down to this order block, but it goes through this one first, and it does reject a little bit, and then respects this one for a lot more. To be fair, they're about the same 2 touches. Okay, so we're going to start this from scratch. So it's a page and a half of work, or written work. So we had the bearish week. This is Euro USD, the recap of the week, 15th of July 2026. So we are asking the question of what caused price to move out of this consolidation. And we're just writing our observations. And what's interesting that this looks random, but you can see patterns. The main two things we want to always going to look at is price, because that's on the y-axis, and time, because that's on the, excuse me, x-axis. So in fact, what time did it reach? So it reached the first order block 12. Let me make a note of this. Second order block, I reached it 6:30 next day. Perfect. Cool. So we start again. So the two main important things is price and time. So we're going to try and think of everything relating to price and time through this mediation of ICT concepts. So we have this distribution or displacement, sorry, that takes out the liquidity and enters the fair value gap. So we don't just go into that zone, we go into that zone with oomph, gazump, with some power, some force, some large power and large candlesticks. So that's where the fair value gap is formed, and that's what took out this liquidity, this green line. And then of course the red line is this range here, is the weekly fair value gap. Just add this for now so you can see what I mean. Right, so this is the weekly fair value gap that we tagged into, and then from there we can start looking for sales. You could potentially get in, I believe. Really? It's just this week. You could potentially get in here. You can see, for example, on the 5 minute, after we sweep, we have a displacement, and we took out some swing lows down here. We even pull back on this occasion, enter the fair value gap, that's your entry right here. So there's this idea here, which obviously price didn't once take out. And wherever your target is, I think our target was around here, right? Whatever that would work is, let's just say bottom this consolidation. So 1 to 5.8. So you would have got a decent entry right there. But other than that, I wanted to know what made price continue, because sometimes price, a lot of the times price will consolidate. So what makes it leave? There has to be something. So that's what we're kind of looking for. So we took out liquidity with huge displacement. We've said that already. Then the high that we took out by 15, 18 pips. It wasn't that much on the grand scheme of things, but when you zoom in, it was 18 pips that we took it out by. And we obviously have the combination of it being inside the fair value gap, the high itself. So then we consolidate in between on the 15-minute time frame, a bullish candle, you can see here. We consolidate between this candle right here and let's just say the bottom of this fair value gap. If I was to fib the fair value gap, it would be between the 6-2 level and the utmost limit of the order block right here. And then we bounce off of it once, come up here, come back down. There's displacement here, but it doesn't take out any structure. It does take out this swing low though, so there's that, but that wasn't enough. The only time we can ever get in is if we get in very close to price. Otherwise, you have to accept that there's a risk that price comes back up. So the original entry we got on the 5 minute is there after the huge sweep. So it has to have a sweep. I've never really seen us being able to get into price in the 1 minute based off of just to pull back into a fair value gap. It's always been a liquidity sweep of a significant high, not just a session high, but structural liquidity highs, such as like daily time frame, etc. And we consolidate between this high right here. We never closed above it, apart from one time where it was by 0.001 pips, and then euros, and then we consolidate in between a range. Then price comes up here, sweeps this and this, so these are equal highs created at this top of the order block right here. After that sweep, we displace. You can see that space right there. We displace literally right after. In fact, this sweep is the first candlestick contributing to that fair value gap. And then we pull back into the next candle. That could be your next entry after the sweep again. That's your next entry. And then bam. We never come up above where you would set your stop loss, which is above here. So after that sweep, we then take sell side after this displacement. We didn't take it with the displacement, but after the displacement right here, we then take sell side. You can see this 6.2 level, we dip into 7.9 level and even further and beyond before coming back up against ourselves. And you can see these equal highs right here got taken out, and that was smaller liquidity, but it was enough. And we didn't initially, obviously it's 15-minute time frame, but we didn't initially get that displacement that we were looking for, but we then got it later right here. And when we got it right here, price then came back up into that range, which is again the 705 level. This is me fibbing the fair value gap itself, and it was the 705 level here that we came up right to, and then we created a swing high and then distributed downwards. So you could have gone in here too, could have gone in here, would have got in as soon as it touched, really, but yeah, got in. And then price then distributed, like I said, to this first order block and then the second order block here. So you could have came out and targeted this first one, which would have been plausible, and then maybe let some runs to maybe the second area and then third area, and so on and so forth. Price never really actually came up because it entered another consolidation zone. And then the interesting thing is this happened at around 8 o'clock, which was near New York Open. And then anything else? It reaches the first order block on, in fact, what's the 8 a.m. is the Thursday, right? Yes. New York, 8 a.m. New York time on the Thursday. And then the following same Thursday at around 12 in the afternoon is where we hit the first order block, which is lunchtime. And then the second order block was from 6:30. So that was the afternoon session. So from the afternoon session, which is from 12, we didn't rally up. And that then leads us into the second area of consolidation. So we're never going to analyze that specific statement I just said. We're going to just start on the second one. And we are coming up to the time where we need to be ending stream. I'm going to try and get this stream to an hour and then I'll close the stream. So we actually have to rush and get ready, but it's fine. Okay. So that's the first area of consolidation. Now this one here, we're consolidating from here, this high, and these lows. So let us look and see. Okay, so this was the order block right here. It had a characteristic of an order block and a intermediate term high, because we came up into this fair value gap here, created this swing high. It's all in 15-minute time frames. A swing high, intermediate term high, and an order block. So in between the mid range, if we fib the that, we then see about the halfway point of that order block, and then the bottom was another order block, actually the order block we distributed to, and the body is right here. Okay, so I think I'm happy with this being a consolidation range. We consolidated between the midway point of this order block here, which was created at open. This one was created the same time, 9:15. So price consolidates in between this order block here, which is the midway point roughly here, and then of course the second order block that we distributed to down here eventually, but with hindsight. But yeah, this order block right here, and the body of that close is where price has been respected. If we go to the wick, the upmost low, we actually create equals with it right here. So you have those two areas. I'm gonna leave them. This is obviously not hindsight. I'm just literally going with the flow. Like you're seeing everything. Anyway, we come up to this area, and I want to go back. How long have we got? About 2 minutes. Okay, so 2 minutes to go through here. We'll probably stop this halfway and then pick it up. And then last point I want to do is end on explaining what we just saw here in the way of institutions, where if we had the aspect of what institutions are thinking, what retail traders are thinking, how does that move now get described? And then we'll go through that and end on that. So in consolidating, we don't close again above this order block, which is not really an order block too far, but this order block here, we don't close above that midway point. We never once even close above 6.2 level. So we never close above the 0.5 and 0.602 level on the fib above, upper order block of the consolidation. We never close above midway point, and we never close above even the 6.2 level right here. And price comes up to it, the order block that is, and never once closes above it. It came up to it the first time here, we displaced, came back up to it again, didn't displace, came back up to it, displaced back up into it, and then displaced down, displaced again, came down to this order block here, came back up, end of the day, open the day, and displaced, no we didn't, displaced up here. Not sure where I got this from. Oh, it's probably from this candlestick here, maybe. And then came displaced back down again. Displaced up strongly, taking out some equal highs into another order block right here, and also this overall order block. If it was to draw from this swing high to the low, So that should be the halfway point. Yeah, the halfway point. Fairly came above that halfway point once. And then displaced upwards into that halfway point, took out some liquidity here into this order block, and then afterwards we displaced back down, took out this swing low, came back into this order block here as the entry, bam, displaced into this new consolidating range. What's interesting is that as messy as this consolidation range is, the displacement was only from here to here. And then you could have also got the better opportunity over here. I prefer this one because this one I did live. So I'm going to explain the first box again with the idea of what institutions are looking for. And then we'll go back onto tomorrow to finish off the consolidation we just started, the second one. Then go over, because this one's very detailed. Like there's so many order blocks and which order block matters, etc. And they also have displacement all over the place. So this one's very, very, very tacky and difficult to break down. So I'd rather do it properly. Going into the first part though, which is this area here. We have institutions, price is bullish. Institutions then take price up into an area of rebalancing the weekly fair value gap and taking liquidity at the same time. So after institutions do that, they probably take out some of their orders and they start repositioning into taking sales. When they take this up here, they take out, let's write this down earlier, 3 sets. So when you have market price, it takes out protective buy stops, pending sell limit orders, and new long buy stops. So those are the 3 types of liquidity we take out. And we then sell our orders to those people and then distributes here. And then we start accumulating partial orders. You can see some signs with smaller fair value gaps being formed. And they're adding the orders. Then they take price down into these fair value gaps right here. Straight after this fair value gap, weekly fair value gap touch, we start filling the fair value gap that we use to take out into this fair value gap. We then take price back into that original pump, and you see the biggest institutional entrance here. They give opportunity for people to enter, and then price delivered even further down. The consolidation is, I don't think, a coincidence that is consolidating between the order block and the fair value gap. The order block is where institutions like to get back in. You see every time it came up, we got in. That's one. Number 2, every time we got up in here, yet not only did we get in, we also had equal highs here, and that got swept. So we took liquidity as well as accumulating orders all throughout Asia session, and then bam, it delivered during London, or yeah, during New York Open, and then consolidated for a while here. And then we can go through what caused this, and then we go what caused this, and then now that we're in this new consolidation range right here, what should we expect using what we learned from these 3 instances if we're still bearish, which I believe we are because DXY were bullish. And let me just have a quick glance at the weekly time frame. Here we're bearish for sure. You can see that we've come up into this fair value gap here, taken out this liquidity here. We have resting liquidity below here and here. I've actually technically created, I think, equal lows, not exactly, but there's lows here and a low here, which we need to take out. So I think that's what price will then go for next. There's liquidity here, and then this liquidity here. So I think there's gonna be some consolidation, and then we can go through what we should expect based on what we learned from these 2 transitions. Okay, cool. That was kind of in depth. That was our first kind of like personal analysis of the markets without using any videos to help us, just straight me reading price based on what we know. Took some notes, recapped on what we did last time, and that's it for today. I wanted to go through the video just to make some further notes. I do want to complete that series next week, the Scout series. I think that'll be efficient to do so, and it would be better to do so. And that is all for today. I'm actually running very behind schedule. I was meant to start getting ready 40 minutes ago, so I'm gonna have somehow get ready. And anyway, it's been your boy CJ, and I'll see you guys tomorrow. Apologies again for the missed streams. We're back again on track, and I'm here every day. It's been your boy CJ, and peace.